Hello guys, it's Castaway Trader and welcome back to my YouTube channel. Today's video is called S&P 500 The Big Picture. Today we will be looking at a structure of the rally started at the lows of 2009 until today, and we will try to see what is the long-term path for S&P 500 and the whole market. Before we start, please read that important disclaimer. Just to remind you, this is how my website looks like. The address of the website is www.castawaytrader.com. And happy Father's Day! Today is our day. And I have a special offer for you. It's 25% discount for my best-selling plan, subscription plan, covering US stock indices. You will get regular updates starting from 8:30 a.m. Eastern Time until 10:30 p.m. Eastern Time, including Sundays. It's a really great offer. You will see details at the end of this video, and in addition to that, I will provide you with a link in the description to this video. Just click the link and read all the details and instructions how you can subscribe. Okay, we will be looking at the model of the 5-wave up fractal under the harmonic Elliott wave, and we will be aligning it step by step with the actual daily chart of S&P 500 started of the lows made in 2009. So any 5-wave up fractal starts with A up, B down, C up, which is counted as wave 1 up, followed by A, B, C down, and this is our wave, corrective wave 2 down. Looking at S&P 500, this is 2009-2013, we get 5 up, this is parenthesis A up, corrective move down, B down, and another push up, another rally, another impulsive structure, clear impulsive structure. It's wave CO1 followed by a corrective wave 2 down. So we got 1 up, 2 down, and of that low we should get the first leg of the strongest part of the rally in wave parenthesis A of parenthesis 3. Coming back to the model, ABC of 1, corrective 2, and another impulsive rally, which we count as wave A of 3, followed by a corrective structure ABC down, B of 3. And this is how it looked like in S&P 500. You can see that wave 1 topped in May 2011, followed by an ugly corrective structure, which we count as wave parenthesis 2 down, bottomed in October 2011, and really strong rally, which stretched to 150% extension of wave 1 projected from the top of wave 2 down. You see it nailed the top at 2123. It stretched like just one step higher, and I count it as parenthesis wave A of 3. Again, it's May 2015, and look at the nice corrective A down, B up, C down, so that corrective A, B, C down, and we counted it as parenthesis B of parenthesis 3. Coming back to the model, once we get first leg up in that wave 3 and followed by corrective wave B of 3, we should get the strongest part of the rally. Normally that wave C of 3 has the steepest slope of ascent, and that's why, and basically it does not have any pullbacks in the process. It's just a relentless part of the rally, the part where many bears would lose money because we would keep shorting it only to get stopped out. Let's look how that part of the rally looked in S&P 500. This is it, and you can see the slope of that rally is much steeper than that preceding wave A of 3. So that confirms that that part of the rally was wave C of 3. And we topped in September 2018. Of the top, we got another corrective A down, B up, C down, which I personally count as a completed wave 4 down. First, because it has a really nice corrective look down. Second, it was deep enough in comparison to that whole move up. Again, we found that bottom in December 2018. Let's come back to the model. Off the top of wave 3, we normally have wave 4, and that wave 4 normally is structured as either ABC down or a triangle which is subdivided into 5 waves, which is not the case in this particular situation. So we got ABC down, and this is where a tricky part comes. You can see that in any ABC down, wave parenthesis A is subdivided into ABC, and it's always a tricky question once you get that first ABC down to make a decision, a determination whether that ABC down was only the first leg in wave parenthesis A down, to be followed by a corrective B up and another move down structured as an impulsive wave, or it was all of wave 4, that was A, B, C of wave 4. Again, coming back to our situation, in my personal opinion, that could be all of wave 4 because it was deep enough, it was scary enough. Because again, in my personal opinion, any corrective move in the market serves only one goal. It has to change mood in the market, sentiment in the market. And if you remember how it felt in December 2018, it was really scary, and bulls get scared, and many of them got stopped out of longs. This is exactly what any corrective move, completed corrective move, should deliver to the market. Complete change of expectations by majority of traders. Now let's come back to what normally happens then. If the December 2018 low was here, and if S&P really played ABC down of the top made in September 2018, then we had to expect another impulsive move up, structured as 5-wave up, which would target the previous top made in September 2018. This is a model, this is what normally happens, and when I talk about September, December, I align that model to the actual chart. Let's look how it played out. And we can see that it played out perfectly. Of the December low, we got a really strong rally, which tapped right at the top made in September 2018. This is why I count that move up as wave parenthesis A of parenthesis 5. Again, that confirms my expectation, my scenario, that ABC drop into December 2018 low was all of corrective wave 4. And here I should explain you, which probably you know by yourself, that many analysts, probably the majority of Elliott wave analysts, think that it was only the first leg down in wave A of 4, and that was corrective wave B of 4, and from here we should get C of 4. And we may probably even say that it was wave 1 of C followed by 2 of C. I don't think so. I have different count because again I practice modified version of Elliott wave. I call it better version of Elliott wave theory. Under that beta Elliott wave theory, the 5-wave up fractal at this particular point assumes that we would get after that impulsive rally in wave A of 5, we should get a corrective ABC move down. So I think we got A down, B up, and we are going to get another drop in wave C of B. But the problem here is that every time we have a corrective wave B in direction of the trend, it could be really strong. Look at ZB. It almost stretched to retest the previous top made by impulsive trending wave. Why? Because at this point price moves in the direction of the main trend, which has been up since the low of 2009, and it's still up. So that is why that move up, even though we were in corrective wave B up, was so strong, and it did not give us almost no pullbacks at all. And in the worst case situation, that wave B up may keep grinding higher up to the top made on May 1st, 2019. Moreover, in many cases, we see that wave B up in direction of the main trend may even stretch higher, a bit higher, taking out the top, making a new higher top, only to reverse after that and drop hard. And under that situation, that would be so-called expanded flat formation, where wave A makes first low, but then a corrective wave B which follows would make a higher high over the top of wave A of 5, and that wave C may be longer than the first leg down in wave A. Let's zoom in and you will see what I'm talking about. If we zoom in, you can see that was the top of wave parenthesis 3. In September 18, we got A down, B up, C down into December 2018 low, and we got that strong relentless rally, which we counted for several months with my subscribers as wave A of 5, and I kept telling them that rally is targeting the previous top made in September 2019. Once we topped early May 2019, we got quick pullback, A, B, C, but look, it was not deep enough to change predominant sentiment in the market, and that's why bulls were still strong, and that's why that rally went so fast and almost immediately coming back to the top made in early May 2019. I do not think that quick drop was all of corrective wave parenthesis B down, because as I mentioned before, any corrective wave is supposed to dramatically change the prevailing sentiment in the market, and in my opinion, I did not see that completely different sentiment in the market. Yes, the drop created so many bears, but now bears think that it's just wave 1 down, 2 up, and we should get a dramatic drop here. And talking about that coming wave C down, it should have an impulsive structure, meaning it should be subdivided into 5 waves, it should be structured as a trending move, and that's why it should be strong enough. It normally should be longer, it should cover bigger distance than the first leg down in wave A. So at minimum, I would expect that once that wave B up tops, it could top at September 2018 top, or could get even a bit higher. So we will be looking at a microstructure with my subscribers. Then we should get an impulsive looking drop down. Targeting is at 2700 or 2650, because of 2650 we see a strong demand zone. If we apply retracement ratios, you could see those green fips. If you measure the rally of that point to the top made on May 1st, 2019 and apply Fibonacci retracement ratios, you could see that there are 3 main retracement ratios applicable to wave A of 5 in order to nail a bottom of corrective wave B of 5 down. Those are first 61.8, 76.4, and 50%. So that's why most likely we will see bottoming of that wave C of B somewhere here in the green demand zone. And once we see the bottom of that parenthesis B down, we should get another strong rally. That would be the final rally structured as 5 waves up, and that would be wave parenthesis C of 5, which would target a new all-time high, most likely well over 3,000 points on S&P 500. Again, guys, happy Father's Day. Just to remind you, I have 24-hour sale which would conclude next noon on Monday noon. And during those 24 hours, you can subscribe for intraday coverage of the US stock indices. This is my best-selling subscription plan, and I offering you 25% discount. And that discount, if you grab it now, will be valid until the very end of 2019. So it's a great way to save a lot of money. Use coupon Father's Day at checkout, and you can go to this page, www.castawaytrader.com/promo Father's Day, to see details, and there you will find a link and instructions how you can subscribe. Keep counting waves and make money. That's it. It was a short video just to give you an idea where we are. Have a great evening. Please like this video and subscribe to my YouTube channel.